All right, guys, this pullback feels brutal, but history is warning us that these moves are exactly what bull markets do. Everyone is bearish right now, but the biggest rally may be just weeks away. On Monday, the market took a bit of a hit that people are still talking about. Today, even bigger, and billions in longs were wiped out in the biggest flush since February. The shock is still hanging over the market like a cloud. September is living up to its reputation as the worst month for Bitcoin, just like in 2023 and in 2024. Short-term holders are dumping coins at losses again. Guys, don't do that. Sentiment is cracked, and everywhere it feels like the cycle is breaking down. But guys, here's the truth. Every cycle has a flush that feels like the end, and every time that flush flips into the spark that sets off the next leg higher. Fear peaks, weak paper hands exit the market, and there's a reload, and it catches everyone by surprise. Today, I'll show you why this sell-off is par for the course and why we are not in a bear market. Guys, if you're excited for this video, if you appreciate it, destroy the like button. Let's get into it, guys. So why did Bitcoin crash this week? Well, it started with the leverage flushes of about $1.7 billion that were liquidated across the markets in just a few days. That kind of cascade selling doesn't stop at Bitcoin. It drags the whole market down. Remember, when Bitcoin sneezes, the rest of the market catches a cold. And there was a single whale that lost $45 million on an Ethereum long when ETH dipped below $4,000, which only added to the volatility. Ouch, ouch. But all told, guys, the crypto market has shed around $140 to $162 billion in value since Monday. On top of the leverage, ETF inflows slowed, especially into Ethereum products, showing that capital was cooling off after a hot summer. But guys, again, if you go look at the velo markets that we always talk about, you'll see that these hedge funds, these CME carry trades, they're actually at a point where it no longer makes sense. And so you're seeing some sell-off from that also. And on top of this, guys, you got macro headwinds that made things worse. The dollar strengthened, the Fed stayed hawkish even after a modest 25 basis point cut, and traders lost confidence in the policy outlook. Technical factors piled on. A $22 billion options expiry added more selling pressure to an already weak setup. Combine that with the usual September seasonality, historically Bitcoin's worst month, and the stage was set for a sharp flush. And part of what we're seeing, this continuation lower today, is in the fresh economic data. US GDP came in much hotter than expected. Trump was right. 3.8% growth versus 3.3% forecasted. Jobless claims also hit the lowest level since July, showing the economy is running hot. Normally, that's good news, but for us and our bags, guys, short term, it's bearish because strong data pushes rate cuts further out, although we still have extremely high odds of rate cuts coming in October. And then we have the PCE inflation data coming in tomorrow. Markets are bracing for more volatility on that. So when you line it up, leverage unwinds, weak ETF inflows, macro headwinds, options expiry, and now strong GDP and jobs data, it's no surprise this crash feels really heavy. But all these pressures are short term. They don't change where the cycle's headed. They don't change fundamentally what we talk about on the show every single day. It's just how the market seasonality is. It's just short-term traders. It's just short-term buyers getting flushed out. Flushes like this always feel like they're the end, guys. That's if you're new, you're not going to know this. That's what I'm telling you. If you've been here for a while, you're probably used to it by now. That's why it's so important. Even though today's video is going to be really short, I just wanted to come in here, have a very busy day, but because there's so much fear in the market, I really want to get this video out and let you guys know not to be concerned. Just go outside, get away from the charts, chill, relax a little bit, because next month, October is typically the best for Bitcoin. So we have this pullback in September and a rocket ship in October. And there's no reason I see for that to not hold true this season. And if we go look at the technicals, guys, the weekly Bollinger Bands have never been tighter in Bitcoin's history. Bollinger Bands, they measure the volatility. When they squeeze like they've done for so long, and the price has gone quiet, the tighter the squeeze, the bigger the move usually follows. Right now, the squeeze is set at record levels. It's like shaking a soda can, and the longer you build up the pressure, the bigger the pop when it finally goes off. We also have the stochastic RSI. It's also turning from oversold levels. That momentum is a gauge that shows when Bitcoin has been pushed down too far. Each time this flashed in the current cycle, Bitcoin has rallied, get this, guys, by about 30%. A similar move right now would send Bitcoin to $150,000. Imagine what that would do for our alts. Guys, really important, real quick. I just did an interview with a new channel partner. This is a really important one. We talk about security a lot. Trezor, hardware wallets, making sure that you're using 2FA, all this stuff. But SIM swapping is a really big deal. A lot of people I know over the past 5, 7, 8, 10 years have been SIM swapped and lost all of their crypto, have their emails hacked in, all these things. So I actually started using the service called Efani, and I do an interview with Mark from the team. I'm going to drop that on Saturday or Sunday. Make sure you guys check it out. If you want more info before that, there'll be a link in the description below here. But it's awesome. Awesome product. Security is super important. So guys, this pullback is painful, but it does not signal the start of a bear market, not even close. The data proves it. Just yesterday, Bitcoin ETFs pulled in $112 million in fresh inflows, and institutions are still buying. At the same time, more than 31,000 Bitcoin left exchanges in the past month. Supply shock is a real thing, guys. And this is not being dumped back on the market. It's being permanently removed by these institutions and these treasury funds, these DATs, ETFs, etc. Glassnode shows profit-taking behavior has spiked, which matches the later stages of past bull runs. And in those cycles, new all-time highs usually came a few months later. Glassnode also marked that we have this key support zone from $90 to $105,000. That's where we have a lot of buy orders, but I don't think that we'll get that low. Let me know in the comments below if you guys think we're going there. Even if we did, again, I was expecting to see some more 30 to 40% pullbacks. We haven't got that yet. So maybe this could go there, right? I'm not saying that tomorrow we're rocket shipping, not at all, right? I wouldn't be surprised. Let's see, Bitcoin went up to 120, like 123, right? So a 10% would put it down to 108, something like that. A 20% coming back 90. Like even if we got to 90, 95,000, that would freak people out. But in my opinion, that would be an amazing place to come in. And that would be the final capitulation before this kind of parabolic portion of this bull run. But guys, just don't take my word for it. You've also got Arthur Hayes, who was not always correct either, but he thinks Bitcoin will be about $1 million by 2028. And if that's true, I don't exactly know how we go through a huge capitulation bear market. But you also have President Trump, who says that Bitcoin will be bigger than gold one day. What do you think that means? That's President Trump. So guys, the Monday flush rattled the markets and the fear hasn't left yet. And I don't know if we've seen the bottom yet or not, but it doesn't matter in my opinion. Just chill. Don't leverage. We've talked about that a lot before. But if history guides us for anything, it's these kind of pullbacks, these kind of capitulation, these things that actually clear the path for the next leg up. And so yeah, this week has been pretty brutal. September historically always has. But guys, we're less than a week away from October. And in my mind, this is where we should be focusing. So with the weekend coming up, don't be worried. There's nothing fundamentally wrong at all with this market, guys. Keep your chin up. And, I've been buying this dip on Aster. That's just me. Went down from 240 all the way down to 180 or whatever. So today I've been just DCAing all the way down. So I think this thing's still going to run like crazy. All right, guys, that's going to wrap it up for today. Until next time, stay sharp, stack your Satoshis, stay strong. Don't worry about this dip. It's opening us up for the next leg higher. I'll catch you on the next one. See ya.